Okay, I'm excited to have with me today Desi Arnaz from Invest Brilliantly, someone who has been an invaluable guide and mentor to me and my mortgage note investing journey. Desi is going to help shed light on this investment strategy that has allowed me and others to generate passive income from real estate without the typical landlord headaches and responsibility. Over the course of our discussion, we'll aim to answer some of the most common questions I get from people interested in exploring mortgage notes as an alternative investment vehicle. Desi, thanks so much for being here and sharing your expertise.
Oh, it's my pleasure, Alec. I really appreciate you having me here, and I'm looking forward to
Thank you.
having our a lively conversation today.
Thank you. Desi, many viewers might be hearing about mortgage notes for the first time. In simple terms, what are mortgage notes and what are the key advantages of investing in mortgage notes over traditional real estate?
Well, I think I can speak to this because I spent more than 30 years investing traditionally in real estate. And for the last decade, I've been investing in mortgage-backed promissory notes. So let me just say that, let me define what a mortgage note is to answer your first question, okay? When a person is buying real estate in this country and probably other countries, but let's just talk about America. When a person is buying real estate in this country, if they are paying cash, then there is no mortgage, there is no promissory note involved because it's just a simple transaction. You pay cash to the person selling the property, they give you the deed to the property and the keys, and the deal's done. However, if a person is not paying cash, Alec, and they need to borrow money in order to buy a house or a piece of real estate,
Mhm.
then the lender is going to require that the buyer of that real estate sign two really important documents. They're simple, but they're very powerful legal documents. One is called the promissory note, which is basically, if you think of it, it's like an IOU. It says, hey, you're loaning me money. I agree to pay you back, and I'll pay you at this interest rate for the next 30 years, right, or whatever. And that's what a promissory note is. Now, the second document that the lender will require be signed is called a mortgage. And a mortgage is basically a document that says, you've lent me money. I have promised to pay you back. If I don't honor my promise, you can take my house. That's all a mortgage says. And so when I say we're investing in promissory notes or mortgage-backed promissory notes, what I'm saying is we are buying the monthly payments that people have agreed to make to a lender for the next 20 or 30 years. And we buy those future payments. So that's what I'm talking about here today.
I got it. That's a great explanation, Desi. What are the main reasons, Desi, someone interested in passive income might find mortgage notes appealing?
Well, here's why I would say people that are looking for passive income should seriously consider adding some mortgage notes into their portfolio. Because most people in America pay their mortgage. As a matter of fact, the foreclosure rate or default rate in America is running right around 5%. So in other words, 95 out of 100 people every month pay their mortgage. So now if you happen to own the mortgage that someone is paying every month, you have a 95% possibility that you're just going to collect money every single month. And unlike being a landlord, you are not responsible for the real estate because you are the bank in that person's life. You are the lender, right? And so if something breaks in their home, they don't call you any more than if you have a mortgage with Bank of America and your toilet gets clogged, you're not going to call Bank of America. You're just going to pay your mortgage. Okay. So for Bank of America, it's super passive. And for us as the owners of these mortgage notes, it's extremely passive. And at the end of the day, I don't know about you, but at the end of the day, what I'm looking for is freedom. And people often say financial freedom, but what I'm really looking for is I want my life back, Alec. I want to own my life. And that means my time. Okay. When I was a landlord, and I had at one point 28 tenants, but when I was a landlord, things were happening all the time. I spent so many weekends and so many weekdays dealing with my property. of course, I did collect rents every month, but it was not passive. This is truly passive. You literally buy someone's mortgage.
Hmm.
They start making their payments to you every month, and there's a 95% chance that that's the end of the story. They just keep making payments to you. Okay, I love it.
Makes sense. Makes sense. Desi, do we buy any specific types of mortgage notes? What type of notes do we buy?
Well, here's the interesting thing. Depending on what your budget is, there are mortgages on all types of real estate. Think about this. Even skyscrapers have mortgages on them,
True.
right?
True.
Mobile homes have mortgages on them. So, what do you want? What do you want to invest your money in? If you have the kind of money that, very, very wealthy people have, then you might want to buy the mortgage on a skyscraper or on a shopping mall because they have mortgages too. You can buy mortgages on gas stations. You can buy mortgages on office buildings. I mean, I personally buy mortgages on small commercial buildings and residential homes. And I like to buy mortgages on homes that people live in for their primary residence. I also like to buy mortgages on condominiums that people live in as their primary residence. And from time to time, I'll buy a mortgage on an investment property that an investor might own. So maybe some guy owns a duplex or maybe a fourplex, and I'll buy the mortgage on that. And I'll just collect those mortgage payments every month. But I don't have lots of money to invest. It's not like I'm a billionaire or anything, but I like to buy mortgages that are right around $100,000 to $250,000 is the balance on the mortgage. That's my sweet spot.
Hmm. Why would you say that's your sweet spot?
Well, I used to buy mortgages that were only $25,000 and $30,000, Alec, and then what would happen was I was dealing with people oftentimes that were struggling financially, right? They have these really small mortgages on these small houses, sometimes in really rough neighborhoods, and they're struggling financially. And what I found is that the default rate was higher than that 5% that I talked about, right? The default rate sometimes was some of those in that price range can be as high as 25 or 30%. That means 1 out of 3 or 1 out of 4 is in default. Not that that's a terrible thing, but I like cash flow. As I said, I'm looking for freedom. Okay, I don't want another job. And so when someone defaults, it puts me in a mode that I need to do things. And what I really just want is I just want mailbox money. That's what I call it, mailbox money. It just comes in month after month after month. Just pay the bill, pay your bill. And so I find that when I buy things that are around 100,000 to 250,000, which I can afford to do, then I'm able to work with people that have decent jobs. They usually are raising families. The homes are in decent neighborhoods, and the default rates are 5% or less. And that's why I like that sweet spot.
Makes sense. I get people ask me questions like, and I want to help them understand how this investment strategy varies from other types of investments, such as stocks, bonds. You mentioned of being a landlord. Is there a reason why someone would choose mortgage notes over other types of investments?
Yeah, I would say there are two reasons. There's probably more, but two big reasons, in my opinion. One
Okay.
is that the returns that you're going to earn are just as good or oftentimes better than you're going to earn in the stock market or as a landlord. And may I just share a quick story about my own portfolio?
Yeah, please.
Okay. I mentioned that I had been investing in real estate traditionally for 3 decades, right? And so
That's
when I
correct.
found out about mortgage notes, I decided for the first time in 30 years, I said, let me just figure out what kind of a yield am I actually earning with my portfolio.
Hmm.
And so I went back a few years and looked at my portfolio and said, okay, how much did I earn? And I found that my portfolio had been producing around an 8% to 9% yield year
Wow.
after year, which is a decent return.
Okay.
Okay. 8 to 9% per year.
Hmm.
And so I was okay with that before I learned about notes. But once I learned about mortgage-backed notes, I realized I could get that kind of return and higher without being a landlord. And I wouldn't have to deal with the tenants or the toilets or the taxes or the none of that. And so that's the first reason, is because you're going to get as good or better return on your money without the hassles of being like a landowner, okay, a property owner.
Okay.
The second reason is that unlike stocks and other securities, when you're investing in mortgage-backed promissory notes, you have something called collateral. Collateral is something that the lender can take if the borrower fails to pay. Kind of think of it like the simplest explanation would be like a car. If you finance a car with a bank or a credit union and you don't make the payments, they can come and take the car, right? That's collateral. So what we do is we do the same thing with real estate. We finance, since these homeowners have pledged their property as collateral, if they don't make their mortgage payment, we can take their real estate from them and we can sell it. And oftentimes, more times than not, the real estate is far more valuable than what I have invested to buy the note. I shouldn't even say most of the time. It always is, because I won't buy a note. I won't pay more for a note than the property value is. So if the property value is $300,000, I'm not going to pay more than $300,000 for the note. I'll probably only pay maybe $200,000 for the note, or $225,000 for the mortgage in the note. So I'd have $200,000 invested in it. If the people fail to pay me, then I would get a house that I can sell for $300,000 and put all that extra money in my pocket. And you don't get that with stocks. You don't get that with even traditional real estate. So I just think it's a better and smarter way to invest. And again, it's passive.
Makes sense. So, are you saying that when you buying a mortgage notes, are you buying them at discount? Is that what you're saying?
Yes, sir. That was something else to me that I found quite unique.
Okay.
Because I had been buying real estate for more than 30 years. And what I found in real estate is most of the time when people are selling their real estate, they're not really anxious to give a discount. It's like, they're saying, hey, my place is worth 200,000. I want 200,000. Well, in the mortgage space, since 1938, when Fannie Mae invented what's called a secondary mortgage market, that's where mortgages are sold, by the way. Like stocks are sold on the stock market, mortgages are sold on the secondary mortgage market, which most people didn't even know existed. Neither did I. But when mortgages are sold on the secondary mortgage market, they are sold below the value of the mortgage. So a $200,000 mortgage is not sold for $200,000. It's sold for something less than that. You get to negotiate that price, but it'll be less than $200,000. Just the opposite of real estate. That's just another huge benefit of investing in mortgage-backed promissory notes.
Okay. Okay, thanks, Desi, for clarifying that. I get calls and people are asking me, how they can, utilize traditional retirement accounts such as 401ks and IRAs, and asking if they are suitable for investing in mortgage notes. Like, asking why would I do that? How is that done? So those are the questions that I'm getting oftentimes. Can you touch base on that, Desi?
Sure, because I believe that it's one of the smartest things can do with their retirement account is put it into that space. As a matter of fact, they have two ways, actually three ways, that they could put their retirement account in that space intelligently, I guess is the word that I want to use. Okay. One is, if they want to be completely passive, they could literally invest in something called a mortgage note fund. Most people know what a mutual fund is, right? It's a fund that is comprised of a bunch of stocks, right? Well, a mortgage note fund is a fund that is comprised of a bunch of mortgages. And people can actually invest their retirement account in a mortgage note fund. That's an option. For most people, though, oftentimes you need to be something called an accredited investor. In other words, you need to be rich, right? And so for a lot of people, that's not an option, but I did want to put that out there.
Yeah. Well,
Another option is
mhm,
for a person to buy a mortgage note directly with their retirement account. They literally will tell their custodian, their IRA or their 401k custodian, take my money and instead of buying stocks, take my retirement account and buy a mortgage note. And some custodians will allow you to do that.
mhm,
Some don't, right? But it is an option for many people that have their money in a retirement account. And
mhm,
then the third, and by far the most popular way that I see people investing in mortgage notes with their retirement account, Alec, is by partnering with someone like yourself or myself,
mhm.
partnering with people that are mortgage note investors, okay?
Okay.
And being the financial partner for a note transaction. So I mentioned earlier that like a $200,000 mortgage note, I would get that at a discount. So let's say I buy that $200,000 mortgage note for 180,000.
Mhm,
Okay.
mhm,
A person with a retirement account that has $180,000 in it could actually fund that transaction and we would own that note together. The benefit of that to the person that's using their retirement account is they are completely passive again. It's almost like putting their money into a fund, except you don't have to be rich, right? Like a
yeah.
fund. Yeah,
Yes.
they get to write a check or actually have their custodian write a check from their IRA or their 401k to you or to me or to some other note investor. That investor buys the note, manages the note, deals with everything, and just pays the investor, pays the IRA or their 401k a monthly interest payment directly back into the retirement account.
Mhm,
And so these folks get to watch their retirement account grow month after month after month, and they never have to lift a finger. And that's why I think people really like it. It's just
mm,
as easy as buying stock. You buy stock, you write a check, you buy the stock, you're done. Except stocks can go up or down. The beautiful thing about this is a contract with your IRA that
okay.
basically says every single day your IRA is going to make a certain amount of money, period. It never loses, it only makes money. That's in the contract. And so that's why I think people really love it, Alec.
Thank you for explaining that. I mean, it's been questioned that a lot of people, call or
Yeah.
message, and I wanted to make sure, somebody like yourself explained this clearly. And I don't think anything can be better clarified like you did right now.
Well,
Uh,
I tell you what, Alec, I see it happening in so many people's lives, and I watch how they can sleep better because a perfect example is a friend of mine is a nurse, right? And
mhm,
she came to me. She had $100,000 in the stock market in her IRA or
mhm,
401k, I think it was at the time.
uh-huh.
And she came to me because her 100,000 she had lost money in stocks, and it was down to $83,000 when she came to me.
Wow.
Okay. And she's
Mm,
like, wow, man, this is my retirement. She's already in her 50s. And she's like, I'm going backwards. And she knew that I invested in mortgage notes. And so she came to me and she said, can I invest with you? And so she started lending me money. She started off initially with $83,000. And
mhm.
it's not been that many years ago that we started working together. But today she has over $250,000 in her retirement account from that initial investment of $83,000.
Nice.
Yeah, and she's thrilled. She's thrilled. I just went out to dinner with her and her husband recently, and he goes, "I need to put my retirement account with you
I don't
guys."
blame you. That's, I don't blame you. Desi, risk is a common concern for many people, right? What are the risks associated with investing in mortgage notes and how can they be managed? Like, how are note investors protected? What exit strategies are available in case of they needing to cash out or get out of that
Yeah,
investment?
yeah, excellent questions. So, and that was like three questions, but I
Yes,
get it.
yes,
Yeah,
there were
risk.
three questions.
You know, I don't ever say that an investment in mortgage notes is risk free because it's an investment. So
True,
there's always an element of risk.
true.
But there are things that you can do to mitigate the risk. One of the things I've already shared with you, and that is this: you always buy a note for less than the value of the collateral. Remember, we talked about that.
Yes, we
So
did.
that's important. If the collateral is worth $300,000, do not pay $300,000 for the note. Because if you have to foreclose and then you wind up selling that collateral for, let's say, $290,000, then you can lose money. But if you only paid $180,000 for that note, right, and you
Yeah.
sell it for $190,000, you still made $10,000. So that's one thing. But another thing is this. I've heard of people losing money in mortgage-backed promissory notes. And when they lose money in mortgage-backed promissory notes, it's typically because they did something incorrectly. They did poor due diligence. In other words, they didn't do their homework well. And by the way, that's one of the reasons that people like to invest with professionals like you and me, as opposed to just buying a note directly. Because if they haven't been trained on how to buy a note and how to own a note, they could make a mistake and they could wind up losing money. But because you and I, this is what we do, we know how to buy notes. We know how to manage the notes. We know how to mitigate the risk. One of the things that we can do to mitigate risk, though, is we buy insurance. We make sure that the property that is our collateral is insured. The very first person that I ever heard about losing money in the note business was a lady that had been a banker for many years. And her bank was selling mortgages to investors like me. And she decided, since she worked there, she goes, why am I just selling mortgages to investors? I should buy some of these mortgages myself. And so she bought a mortgage, her very first mortgage herself. But she had not been trained on how to actually do it. Even though she worked at the bank, they didn't teach her how to be a note investor. And so she bought a mortgage, Alec, and she was happy about it. But she hadn't checked to see if the collateral, the real estate, had insurance on it. And guess what happened? The house burned down.
Oh, wow.
And there was no insurance on the house. And so now she had a mortgage on a vacant lot. Okay. And a vacant lot is not nearly as valuable as a house. And so when she sold the lot, she lost a good portion of her investment. She didn't lose it all because she was able to sell the lot, but not nearly enough to recoup her losses, to recoup her investment, I meant to say. But so that's one thing. And so one of the things that I do is I never, ever, ever close on the purchase of a mortgage note if I have not verified that there is insurance on that real estate. Okay, that's just one of the things. And there are many things that you can do. I have a 127-point checklist that I go through before I buy a mortgage note. And the purpose of that checklist, Alec, is to mitigate loss. And verifying insurance is one of those things. Okay.
Well, it's a process of due diligence that goes behind closed doors, right? There is more going behind closed door that a trained professional note investor is going through to determine whether or not it's, good to be purchased or not, right?
Correct. Correct. And that's why people like to invest with guys like you and me, right? Because this is what we do. This is what we do. And we know how to do this, and we know how to, and we still, because notes are profitable enough, we can still pay our financial partners excellent returns. And they don't have to do anything. They write a check, and then they get money in the mailbox every month. That's it.
And we do the heavy lifting, right?
Yeah, we do the heavy lifting, right? That's what we do. So, I mean, I'm not trying to pitch that. I'm just simply saying that's how it works. It's no different than if they were to invest in a fund. But as I said, you have to be a millionaire most of the time to invest in a fund. But millionaires do this constantly. I manage a fund, and I have a gentleman that just called me this week. He sold his winery, and he wants to put $3 million in our fund. He's already got 1.3 million with us. He wants to add another 3 million. And that's interesting, by the way. I should point this out.
Okay.
Here's a gentleman that's very wealthy, right? When he sold his winery, he didn't call a stockbroker. He's learned, I'm not putting my money in the stock market.
I don't blame him.
Yeah. He said, I'm calling someone in the note space, and he called me. Once people see this and they go, wow, I can get a decent return and I can have collateral backing my investment so that I don't have to worry about losing money. And my profits are contractually, legally obligated through a contract. My profits are built into the contract.
Mm.
What more do you want?
Mm. Yeah, I mean, I agree
As an
with you.
investor, it doesn't get any better than that,
Yeah, yeah.
you know? And
No,
that's
that's
why
a
people do this, Alec. And that's why when you gave me this opportunity, I jumped at it. I said, I really want to spread the word because like everybody, like so many other people, I can't say everyone, but like so many other people, before I learned this, I did lose money in real estate deals and I also lost money in the stock market, because
well.
I put money in stocks.
Well, and it was kind of, I didn't want to at least, at the beginning share my secret weapon, my mentor, but I thought a lot of people can benefit. So I know I have
Yeah.
asked you this question, Desi. I know I have asked you on many occasions, but I'm gonna ask you right now the same questions that I posed to you. Somebody looking to get started. If you were starting from scratch today as a complete beginner, interested in mortgage note investing, based on all of your experience and knowledge accumulated so far, what steps would you take or what advice would you give your beginner self to get started in this field the right way?
Wow. Well,
That's
that's a big question.
I know.
Yeah. That's a big question. Um, Knowing what I know now, what I would do is I would learn everything that I possibly could about note investing as quickly as I could,
Okay.
because uh, I would want to be a hands-on investor. Now, if I were going to be a passive investor, hands off, like for example, let's say if I were a doctor and I just don't have time
Hmm.
to be an investor, to learn all this stuff.
Yes,
In
makes
that
sense.
case, I would take my time to find a guy like you. I would literally say, who can help me with this space?
Hmm.
And I would find a guy like you, Alec, and I'd reach out to you and say, okay, tell me about your background, tell me about your history, tell me about your training, your experience. And if I felt comfortable with you, then I would literally park my money with you and we can do deals together. However, if I wanted to be hands on and I said, oh, I actually want to own the notes myself, then I would find a good mentor. Because at the end of the day, this is a new space.
Hmm.
And while it's simple, it's not a complex space. There are many moving parts, right? That's why I have a 127-point checklist, because there are many moving parts. And if
True.
you don't know those parts, then you have no business investing in this space. Warren Buffett, we all can agree, Warren Buffett is like one of the most successful investors of all time, right?
Yep.
He says, invest in what you understand. And I couldn't agree more.
That's very good point.
Yeah, invest in what you understand. And most people don't understand mortgage-backed promissory notes. So if I were just starting off fresh, I would first get an understanding of it. If I want to be active, I would get an understanding of it, a
Hmm.
good understanding, and I'd get me a mentor to walk me through my first one or two deals. And that's where a guy like you can come in too, right? You can say, okay, let me hold your hand and help you do your first couple of deals. You got the experience. I've got the experience. That's the kind of thing we do. And we
Yeah.
help people get their feet wet without worry, because we know where to step. We say, step here, don't step there. Do this, don't do that. Okay. It's nice. It's nice. And we can help people that way.
True. So basically, you're saying that there are two typical ways to start in investing in mortgage notes. Either you can partner with a professional note investor who has developed a system and process for finding discounted mortgage notes, or you can invest in a mortgage note university like the one education platform you have to learn how to become a mortgage note investor on your own. Before we go there, I mean, I'll definitely, we'll talk about the mortgage note on university. I wanted to ask you a question. People worry that investing in mortgage notes, I know you touched base on this, but I'm going to ask you again.
Yes, sir.
People worry that investing in mortgage notes requires a lot of capital, which not everyone can afford. What can investor with limited capital or those who have exhausted their funds to do to participate in business like this?
As an active investor, yes,
Uh,
they're going to have to be, because if they have no capital, they can't be a passive investor, right?
yes,
Um,
that's true.
so they're going to need to be an active investor. So one of the things that they can do is get their knowledge and skills up. There are 7 essential resources that are required in order to actually be a note investor. Money is only one of the 7. Okay. You need to
Okay.
have business connections. You need to have skills. You need to have due diligence expertise. And there's 7 different things you need to have. Money is only one.
Mm-hmm.
If a person has the other 6, there are plenty of people out there with money that will partner with them. And so if a person was just trying to get started and didn't have a bunch of cash, understand that it's not about how much cash you have. It's really more about what is your skill set? What's the value that you bring to the deal?
To the
If you
table.
bring value to the deal, someone else will put up the money. There's plenty of people who have money, but no skills and no time. That's why the stock market is so huge. People with money, but no skills and no time. So they hire a stockbroker to manage their portfolio. They'll do the same thing with you if you have the skills. So,
Thanks. Desi, do you have any tips for building a successful portfolio of mortgage note investments over time?
yeah, constantly. Well, if you're trying to build your own portfolio, you need to open your mouth. You need to start telling people, this is who I am, this is what I do. Even if you're a teacher, when you go to a party and you're trying to build a note portfolio and someone says, what do you do? Don't say, hey, oh, I'm a teacher. Okay. That doesn't help you build your portfolio, right? You say, no, I am a mortgage note investor. And that'll start a conversation many times, right? And it may go somewhere, it may go nowhere, who knows? But it's certainly going to go farther than saying I'm a teacher, because that's the end of it. You're done, right? And you don't want people to see you that way. People need to see you as a professional investor
Mm-hmm.
with a special set of skills that works with other people, right? This is how they need to see you. A professional investor with a special set of skills that works with other people that don't have those skills and partners with those people and shares profits, right? At the end of the day, if they see that, if they like you and trust you, Alec, they will say to you, how can I invest with you?
Mm-hmm.
You don't even have to say anything to them. They're like, wow, how can I work with you? But first they have to like you, they have to trust you, and they have to trust that you have the skills. Okay.
No, thank you for sharing that.
Yeah.
One thing that I wanted to ask you about I mean, how do you, being in experience in the industry, how do you think, what do you think about the future of mortgage note market? What opportunities, challenges do you see?
Well, I can see the big difference today than 10 years ago, 11 years ago, when I started in the mortgage note investing space. There's a lot more people that know about it today than there were 10 or 11 years ago. So there's more competition.
Mhm.
However, the competition is still tiny as compared to real estate. And the proof of that is you can prove that to yourself very simply by doing this. If you were to walk down the street and ask 10 people, what do you know about investing in mortgage-backed promissory notes? You'd be lucky to find 1 out of 10 who knows anything about it. Okay.
Yes.
Versus, for example, if you were to ask 10 people, what do you know about investing in real estate as a landlord or a flipper? You'll
Hmm.
find 2 or 3 out of 10 that'll say, oh, yeah, I'm a landlord. I own a rental house now, blah, 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 right? So there's still a huge opportunity for people that want to get into the mortgage note space. And so if I had a caveat, any warning for anybody, I'd say get in now, because 10 years from now, it just won't be the same. I don't think it'll be the same.
Yeah.
But those early adopters like you, Alec, like me, and like the people that may consider joining us now in this space, they're going to find that their expertise will become more and more valuable to the market as more people find out about it. Because as people find out about it, they're going to be saying, who can help me get started in the mortgage note space? Right? People
True.
are asking the question, who these days? There was a time when people would say, how can I do this? But now people are saying, who can help me do this? People have come to realize that we're in the age of collaboration. We really are. I mean, you look at companies like Uber.
True.
Uber
Yes. Yes.
Uber, look at this. This is a crazy company. Uber has made a fortune. They make billions of dollars a year in the taxi cab business, but they don't own a single taxi cab.
Yeah. I agree.
Collaboration, baby. That's what they do. They collaborate with people who have cars. DoorDash, another one. Amazon, another one. That's the age. And what people need to understand is they can be the Uber of this business. There's people out there that will collaborate with you if you've got the expertise. Uber had the technology. Other people say, hey, you got the technology, so let's work with you. And that's what I'm saying. So you said, what's my take on the future? My take on the future is this: people will always have mortgages because most people won't ever be able to pay cash for their real estate. So there will always be mortgages available to buy. Okay, always. So that part of the market is going to be huge. The only question is, how are you going to play in that space?
Mm-hmm.
That's what you have to answer right there.
Mm-hmm.
Okay.
Desi, how recession proof are mortgage notes?
Recession proof. Well, they're contractual, right?
Mm-hmm.
There's a contract that people sign when they sign a mortgage, and that contract says, I will pay you your payment every month. It doesn't say I'll pay you your payment every month if the interest rates don't go up, or if the economy, I'll pay you your mortgage payment every month if the economy is good. No, it says I will pay you your mortgage payment every month,
Mm-hmm.
or you can take my house. I mean, how recession proof is that?
Makes sense, Desi.
To me, it's not market driven. And that's what I love about it, you know? I made a lot of money as a real estate investor, a lot, right?
Mm-hmm.
But it's all market driven. And I had 3 or 4 times during my lifetime where my real estate business suffered because it's tied to the market. Now, my mortgage business, my mortgage note business, went through COVID and didn't miss a beat because even during COVID, people still paid their mortgage payments.
Yes, understood. No,
Yeah,
thank you for clarifying that. I mean, those questions have been asked, so that's why I wanted to ask you. I mean,
yeah.
in conclusion, you said that again. I'm going to repeat that. Typically, there are two options to get started investing mortgage notes. You can either work with a professional note investor who's gained knowledge, expertise, and built systems and processes to find mortgage notes at a discount to invest in, or you can invest in your own time and education to become a mortgage note investor. Did I hear you correct?
Yes, sir. That's exactly correct.
Well, that leads me to a little secret weapon here. I mean, if somebody has the time and money to invest in education, where they can learn how to become a professional mortgage note investor?
Okay, well, yeah, thank you for setting that up. You know that I actually teach and mentor people, and I started a company called noteinvestoruniversity.com,
That's
right?
correct.
Thank you for setting that up. I appreciate that. But we are one of probably a half dozen places that people can go to learn how to invest in mortgage notes, right? To
Yes,
get a formal education on it.
true.
So, Note Investor University, in my opinion, of course, it's my business, but in my opinion, it's the best place to go to learn this because you get hands-on training. We have a complete curriculum, A to Z, so that people can learn what they need to learn in a fashion that it makes sense, right?
Exactly.
As opposed to like YouTube University, where you don't know if what you're learning is even accurate. You know, it
That's
could be
correct.
old, it could be outdated, it could be just wrong. But in our environment, people learn what they need to learn and they get coaching, from me and from our coaches and staff. And so uh, that's what I would recommend. They could just get in touch with you because, of course, you're one of our associates here. So you can invite them to one of our meetings because we have periodic meetings right every week.
Yes.
You could also invite them to actually enroll in the university. That's an option, and they can do that right through you, Alec. And so I'm sure that you have a link or some way for people to reach
Yes.
out to you.
Yes, we
And
do.
that's what I would suggest for people that want to learn it. And Alec, I would also suggest to them that if they are going to do their first note deal, even if they're going to be active, I would suggest to them that they do need to, it would be smart for them to partner with you on their first note deal or two, because of your level of expertise, you can help them through that process and hold their hand. And you guys could do a short-term deal. You don't have to do a 30-year note deal. You can say, hey, just for the next, 24 months, we're going to be partners, and I'm going to hold your hand and make sure that your first note deal is a successful note investment.
Yeah.
And you would help people with that, wouldn't you?
Yes, definitely. I mean, I'm
Yeah.
learning from the best, right?
Right. Right. Yeah. Yeah,
Thank you.
exactly.
No, thank you for sharing that. I mean, any wisdom? I know you drop a lot of good stuff. But anything for the end to just to resonate with people that may see this video and they may consider mortgage notes. Anything
Yeah.
that you want to share?
Yeah. I'd like to wrap it up, Alec, by saying this. The opportunity is here and it's now. Okay. Don't let this pass you by. I'm so glad that I decided to pursue it because it's changed my life. It has changed my daughter's life. It has changed our students' lives. It's changed your life. And I just know that people that take a look at this space and take it seriously, I've never, ever heard anybody say, I regret getting started in this space, ever. The only regret that I've heard people express, Alec, is I wish I had started sooner. This is literally one of those kinds of investment opportunities, or those kinds of opportunities where people say, I wish I had known this sooner. And for that reason, a lot of people are now bringing it to their children. Just the other day, I was on the call with one of my students, and he brought his 29-year-old son. He says, son, you've got to see this. Okay. And so that's what I would say. If I were, as a closing remark, I would say this: don't wait. Get yourself into this space. This opportunity is fantastic. You're not here by mistake. You're here by divine appointment. The fact that you're hearing this message, it is meant for you. Take advantage of it. That's what I did, and I've never looked back. And my life has never been the same since then. It's been so much better, so much better than I ever thought it would be. So that's it, Alec.
Thank you, Desi. I appreciate so much. I mean, you sharing this. Hope a lot of people are gonna be able to see this and get to understand about mortgage notes as a investment vehicle. It's okay to change somebody's life by getting the information out there and exploring what's available. That's all we
Mm-hmm.
can do. I mean,
Mm-hmm.
like they say, opportunities out there. It just whether you are open-minded to seize them or not, it's up to you, right?
Yes, it's up to you. There's
Yep.
an old saying that I heard back when I was a real estate agent. A gentleman, he was 30 years old at the time, and I was about 25, and I was a real estate agent.
Mhm.
And I was 27. That's right, I was 27. And he said to me, he said, Desi, he was a self-made millionaire too, by the way. I should tell you that.
Mhm.
By age 30, he had already made his first million.
Mm.
He said, Desi, he said, my mantra is this: if it is to be, it is up to me. 10 words, each word has only 2 letters in it. If it is to be, it is up to me. And I said, you know what? I love that.
And I like it too.
I adopted that.
Yeah,
Okay. And
I
that's how
like
I
it.
have lived my life. And so I'm just saying to folks, look, guys, it is to be. The fact that you're here, I think it is to be. It's meant to be for you, but it's up to you. And Alec has given you a fantastic opportunity here. And I'd love to see you guys as a part of this exciting growth community called Note Investing.
Thank you, Desi. Thank you. Hope to see you again.
You're welcome, Alec. Thank you for having me on.
Thank you. Have questions about mortgage notes? Drop them in the comments below and we'll do our best to answer them.